Hey everybody, Boris, let's begin Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, February 11th to February 15th, 2018. And I think the story in the calm dollar land was this kind of a very sudden and swift reversal of fortune. Certainly a very, very fundamentally driven reversal of fortune with Aussie and Kiwi as RBA turned remarkably dovish in its assessment, essentially saying risks were neutral or equal for a rate cut as well as to a rate hike. And that completely turned sentiment around. That whole 73 resistance just turned into a complete cement ceiling. Aussie came off of the highs. So did the Kiwi. Kiwi followed it with very weak unemployment data that came in midweek last week. The one positive data point this week on the calm dollar land was the Canadian dollar, but that got very little play here at the end of the week. Oil dropping by $5 almost, dropping by 5% down to the 53 level. Definitely didn't help. And the whole negative vibe towards commodities as the week turned changed everything around. We came into last week and I was bullish Canadian dollar, and I was completely wrong in terms of further continuation. I did warn that the Canadian dollar is notorious for making two steps forward, one steps back, but it really was just simply at this point, I think, a complete bust as far as the continuation trade goes, and it effectively did not move at all off the last week's lows. So this week, the ranges have certainly moved. In Aussie dollar, we're now 72 to the offer, 70 to support. 70 becomes a very, very critical support, although the Aussie has just had a lot of selling going on in the last couple of days, so it may find some bidders at this level. Dollar CAD now is on the verge of actually turning bullish, meaning the Canadian dollar turning bearish if we break the 34 handle. And I have to look at that formation, because the formation, which looked like essentially a distribution to the downside, now has turned into a W formation, which looks to be a break back up towards the recent test of the recent highs at around 37. And Kiwi also followed suit. One of the largest breakdown days in months for Kiwi. That generally tends to have some reverberation into the future, so we should be watching that very carefully. Looking at the calendar, nothing on the calendar of any import. We got Kiwi, RB, and Z cash rate. Even though that seems to be like a major event, I suppose it could be a major event if they follow the RBA in terms of being a more dovish stance. But the market has already kind of absorbed a lot of the dovishness, I think, into the Kiwi. So unless they are extraordinarily dovish, this could be one of those non-intuitive responses where the Kiwi actually rallies on the idea that they aren't threatening to cut rates. If they just simply say, yeah, we're going to stay neutral for a while, that actually will be viewed as mildly positive, given the fact that we have a big sell-off in the Kiwi as we go forward. Elsewhere, I don't think we have anything else in the calm dollar land. I'm just looking to see, but I'm pretty sure there's nothing here. Yeah, it's just all major stuff. Well, we do have the business manufacturing PMI, which is also a very minor response. The big data was this week as far as Canada goes and RBA goes. So it's really only going to be RBNZ. No, I take it back. We have just a trade balance out of Canada. Also a very minor report on Monday. So really going to be the Tuesday RBNZ, essentially actually also the big monetary event this week, because it's the only central bank event this week. But here, as I said, unless they just sort of threaten a rate cut, it could be one of those kind of things where the Kiwi either shrugs it off or it actually bounces up on the fact that it's sold off so hard. If we look at the charts here, here's what I'm talking about, this kind of a W formation. It's not quite a full formation. A true bullish break would be a break above the 34s, and we're still quite a long ways here. But this notorious move of Caddy, where it moves down and then comes back and retraces almost like 80-90% of this particular move, is a very, very key signature. What I think is what's troubling me and why I can't really get negative dollar CAD is not only was this a retrace move, this was really a takeout of the 20 SMA. This is now showing more power than you really want to stand in front of. I don't want to be shorting this because we're now holding this. And now if we come back down and close below this, yeah, that certainly gives you a much greater degree of confidence that we had a failed retrace, and we could possibly drift back down towards the 31s. But until we see that structure on a closing basis, it's actually more of a buy than it is a sell. You do have this big resist at the 33, 34 level, and for it to really take it out, you'd have to just close above the 34s on a very bullish basis. At which point, the whole structure turns from what was kind of a negative move, working off this particular up leg, to now becoming a positive move, regaining strength and re-challenging the former highs at around 36. The really interesting story was, of course, the Aussie. This massive drop off the RBA just, I think, eviscerated the Aussie longs, and we're closing now deep below the 20 SMA. The 73 now becomes a very serious resist point, and whatever drift we get likely is going to be curtailed by, I mean, we certainly have a chance to get a drift here back up to 71, maybe 71.25, but unless we come back and recapture the 72 SMA, or the 20 period SMA, which at that point would be around, I guess, 71, 75, so maybe 71.50. It's hard to make to make a turn case. The only thing, I think, the only point of support and hope for Aussie bulls is the fact that we've held this 70-50 support zone. If we, however, next week we come back out and really break it down and then come back down towards the 70, that becomes a much, much more negative construct. It doesn't mean that we're going to go straight down back to the fat finger tests of the 68s, but it does suggest that this negative turn could be much longer in duration, that a break at a 70 would means whatever retraces we have are going to be weak, and we could have potentially a full extension down to 68s. That assumes, I think, a couple of perhaps geopolitical things, which is China, U.S. get even worse in terms of trade tensions. Global PMIs continue to slow down, and the RBA really begins to be concerned about the potential of recession for the first time in 25 years in Australia. So a much more dovish tilt by the RBA, and even some hint that a rate cut could be coming before the end of the year, which is something the market completely did not anticipate, certainly sends Aussie through the 70 level. For now, it could be a very consolidative week with very little directional moves here, but certainly the intelligent trade here is to short any retrace, assuming it does not recover above the SMA. If it takes the SMA on a closing basis, at that point you certainly want to rethink it, and very minimum just put a stop above this breakout candle, because that would completely disrupt the structure as we go forward. Kiwi, same kind of a thing, big drop. I think single biggest drop in months here in Kiwi. The RBNZ coming up now. If RBNZ sort of even guides us even further lower, right? If let's say they want to see us. This was actually interesting, because I remember this was the RBNZ reversal, where the RBNZ came in. They weren't as dovish as the market thought. This was a big reversal on the dailies, and we came back and essentially came off the 65 lows. This was also, I think, this was the fat finger. This wasn't RBNZ. This was the fat finger reversal off the 65s. But this was, I think, around here somewhere was the RBNZ statement that changed things around. Now, we're still, if you kind of pull back here, we're still holding higher lows. But clearly, momentum is to the downside. We closed pretty much near the lows of the day. And if the market gets negative into RBNZ, or if the RBNZ really suggests that there's potentially a rate cut to come, there's certainly more than enough possibility to extend down to the 66s, which is really the true support here. The fat finger support is basically the 66 level, which we came right underneath the 66. At that point, I think you're going to see some buyers, from this prior low. But from here to there, there's still quite a lot of move to the downside. So it's interesting. You could front run it on the assumption that maybe RBNZ would be uber dovish. You could just stand back, and if it's a reversal, then the only thing I think that would make me want to maybe buy this on a short covering basis is if we closed again here above the 20 SMA, because then that would establish a higher low and potentially a rebuild, at least back up towards the 69 level, as far as technicals go. Either way, you can see there's just a tremendous amount of indecision in the marketplace right now after we've absorbed some initial shocks in the trade. And next week should be a pretty interesting resolution to a lot of those moves. Wish you guys a lot of luck, a lot of trading. Boris, over and out.